All right. Anyways, let's get back to the money, to the real talk, Thomas. It's been a couple of days since we saw this massive spike in Bitcoin. We're seeing a little bit of a consolidation, somewhat expected. Altcoins have been somewhat steady as well. I mean, Bitcoin dominance remaining in this 54% range. I don't know how you're playing this, but I kind of expected some sort of a cool down. I mean, we got what, like 70, high 60s, low 70 days until the Bitcoin ETF is officially supposed to be announced. That's the deadline in January. I think the calculated odds are somewhere in the 80%, according to Bloomberg. But back to the charts before I pull this up. Yeah, pretty interesting consolidation, 34,000. Again, the key range that we need to hold up before things start getting a little shaky is 32,000. I really want to see that kind of remain a strong range. You know, it's really interesting because I think a lot of people, especially in this cycle, and we're going to see this as we get closer to the halving, people are going to get extremely excited. Oh, you know, like for some reason, people like to attribute halving with substantial price increase. What did we see last cycle? Well, everyone was kind of hyped here about the halving. We had a massive sell-off a month before. We went from 10,000 all the way down to 4,000. Obviously, this was the COVID crash, and then kind of price appreciated and then pretty much was stagnant for about 2 months moving into the summer before we really saw that take off in the fall. So
crazy.
It'll be interesting to kind of see whether or not this happens again. For the most part, again, a lot of people are going to get really excited about the halving. A lot of people are going to be shilling crypto, Bitcoin. Seems to happen quite a bit. So we'll see. I mean, this is kind of a maybe buy the hype, sell the news type of event, or buy the hype and just kind of sit on it. Yeah. Historically, that's what's happened, and it's important to be aware of that. But yes, let's take a look at what you have. Story in 2023 has been very clear. Bitcoin is up more than 100% year to date, while TLT is down 20%. Is Bitcoin replacing bonds as a safe quality asset? I wouldn't go as far as, I was going to say it's a bit extreme, but it's definitely true that some of the percentage of investors doing this, though. Bitcoin replacing bonds is okay, blah, blah, blah. Yeah, I mean, I think like I've always found this interesting, right? Like we saw this narrative pushed very heavily on us, especially during the last cycle. I mean, everyone was saying that crypto is going to replace the banking sector. It's going to be the brand new banks. Banks are going under, whatever. I think, I mean, at least from the way that I like to look at these things, like it's important to remain balanced, kind of take a nuanced view. Obviously, we don't know what's going to happen. However, yeah, I mean, still a lot of uncertainty in terms of regulatory clarity. The ETF is going to help a little with that. But then, I mean, I think the question moving forward is, what about all the other projects in the space? I think it's too early.
I would say that, it was, one point of view of this is because of huge QE, quantitative easing, huge amount, the Fed printing money, people saw inflation was going to happen, and there was a flight to Bitcoin as a hedge to inflation, right? That just it didn't really end up being true if you look at the sort of price action of Bitcoin while we are in a max inflation period. And I would say that what actually happened was QE just caused more money to be sloshing around, which means there was just more people buying riskier assets, right? And so I don't know, it's very interesting in finance, like, there's just so many different variables and things going on, and it's easy to connect this to that. But yeah, I don't know. I thought that was sort of an interesting thing. It's not super compelling to me that, people are flying to using, buying Bitcoin instead of treasuries.
Yeah, I mean, you're also talking about an asset class that's $130 trillion. Like, and that's the global bond market. The total market is $133 trillion. So I don't know, like, you're just way too early to say these types of things. You got a lot of time. A lot of time has to play out. I mean, I guess like it's interesting to consider from an investment perspective. Like, do you have good risk reward in betting on that narrative? Sure, maybe, but like in order to say something substantively, motherfucker, I can't talk today, but like in order to make that claim, I think you need a lot of time, to kind of
Yeah.
see how the entire space develops. Obviously, a lot of people buying crypto are betting on a total government default, collapse, whatever it may be. So I don't know.
I also, what do you think about the idea that us and I have an article pulled up here. I don't know if you saw, but last night the U.S. launched,
Strikes on
strikes,
Syria. Yeah.
yeah, on Iranian-backed facilities after an attack on American troops the day prior. Um, Joe Biden's asking for another for 150, 100 something billion-dollar aid package, military package for both Israel and continued for Ukraine. Um, that's another argument is that like we're gonna have to print more money, go back into QE to fund these wars. I don't know, even though $100 billion is a lot, I guess these things can scale up as we're seeing right now. Like, the U.S. was clear to say we're not trying to antagonize, but and we don't want to get involved with this war, but we have to respond. I think unless we get into like much more of a full fledged war, like $100 billion is of course a lot, but is it enough to like alter Fed policy? I don't really think so.
I mean, you've had this stuff going on for who knows
Ever.
how long.
Yeah.
Yeah, dude, like I'm gonna see if I can find this quote from Tolstoy because I think it beautifully encapsulates kind of what we're discussing. You'll have to give me a minute with that, but man, like I just think, yeah, I mean, this is where the whole crypto question really becomes interesting because, I mean, obviously, as I mentioned earlier, like a lot of people are saying that this is the way we get out, and this is the way we are saved from this never-ending cycle of expanding debt. I read a book which, what was it called? The Great Devaluation. Estimated that we'd hit a $30 trillion debt ceiling. I think it was by either 2025 or 2030. Nonetheless, we arrived at $30 trillion early, and we are now at $33 trillion. So I guess it's really interesting to kind of consider how will this stop? When will it stop? Some people go as far as saying like war is necessary in order for this to continue, which is, who knows? But I don't know, man. It's pretty crazy stuff, I will say. Let me see if I can find this quote, Thomas, but give us your thoughts, man.
Yeah. Yeah. No, I mean, as I said, unless we, I think, get into much larger wars, like, of course, it's a lot of money, but I don't think it's enough to like change Fed policy right now. However, I mean, we also appears that we'll have rate hikes, at least not increasing. There's of course a risk there of like stagflation, is what some people think we are in for. Would be curious how that would affect the crypto markets. But yeah, I don't know. It's I kind of feel like no one fucking knows. Like
Yep.
it's like fucking around with like chemicals in a lab, but these are like financial chemicals, and there's just so many unclear other factors, other things in the air that you don't know how they'll react. Theoretically, could we just keep kicking the can down the road? I guess. Also, like, I don't know, maybe one day something happens and then we're all like fucked and the US is done. Like, I don't know, man. I don't think anyone knows.
Yeah, well, I think, wait, before you go on, I just want, it's almost as if you read this book, man. Tolstoy says, he says, the more we try to explain sensibly the phenomena of history, the more senseless and incomprehensible they become for us.